As expectation, I told you, because of the BitMEX, the price of the Bitcoin fell. Suddenly, short-term price drop can generally be attributed to five major factors. A cascade of the liquidation on BitMEX, while seeking liquidity at near support level, an upstick in miner selling, and the rapid growth of the option market. The cascading liquidations on BitMEX, we all can see the chart here is about the BitMEX between the Bitcoin and the USD liquidations. On the 21st May 21st, the sell liquidation is go higher. It's high around. From the left side, the liquidation is on the range of 6 million to 9 million, and from the right side, from 24 million to 36 million of the total half-hour limitation. Cryptocurrency trader Carlos AK wrote that for the past week we have been bouncing between 9,850 and 9,250 with the slight deviations. Good level to play if you like a good range. 9,850 is preceded by several STF resistance, but after 10,500 we should see the firework. 9,250 break. I expect mid 8,000. Yeah, he expects that the price may drop down to the middle of 8,000. Yeah, in the April 20, it took 30 days for Bitcoin to rally from 5,800 to 7,700, but it took less than 9 days for Bitcoin to surge from 7,700 to 10,000. We all can see where here it shows that the price it took 30 days for the price to go up, but it took only 9 days for the price to drop down, and we all can see an upstick in the miners selling. According to the data by TREE, the miner rolling inventory MRI, yeah, we all can see here fair value 35.9%, and the MRI, the spending and the holding, between the spending and holding is 102.8% of spending. More recent is the rising USDT withdrawal. On the chain data of the last node, so the number of Tether, the USDT exchange withdrawal reached at the all high, and people they need more cash and withdraw, and it make the price drop. USDT number of the exchange withdrawal just reached an ATH up to 2083.737. Previous ATH up to 1075.792 was observed on April 30, 2020, and the options market is expanding volatility. The Bitcoin option market is expanding at a rapid rate, with the bid reaching $1 billion in open interest, unlike future and spot price that are relatively easy for both long times traders and beginners to navigate. Option contracts are conceptually more trader and beginner to navigate, with option being one of the three big markets alongside spot and future. The volatility of Bitcoin and diversity of investors within the market is increasing. In the near future, the option market is likely to have more impact on the price trends of Bitcoin. As a Bitcoin having thus settled, network awaken to costly new reality. You all can see my share screen. As a Bitcoin having thus settled, network. As a Bitcoin having thus settled, network awaken to costly new reality. Now that the Bitcoin block reward have been held, BTC hash rate and transaction fee are feeling the impact. It means now the miner is hard to get more coin reward. These things haven't quite been the same since the Bitcoin BTC halving. A substantial number of miners have pulled the plug on the equipment due to the health reward. Consequently, transaction fees are now considerably higher. The hash rate has just around 25 to 40%, and new blocks are generated at remarkably low speed. So, what can be done to prepare for this new post-halving reality? Or will things return back to normal in the near future? Here's a close look which blockchain process has been affected. The first effect is the hash rate. One of the most important post-halving trends is the decrease of hash rate, which was some experts had warned about shortly before the event, because the profitability of miner has blocked due to the health blocks reward. The older generation of mining units, such as the anti-miner S9, have been smoothly turned off. Currently, an ARM miner S9 is estimated to generate a negative of more than $2 per day. So it doesn't make sense to keep such units online unless the miner have access to free electricity. Yeah, we all can see that. Miner, they use the ARM miner S9 and they just get the reward only $2 per day, so they need to block out the mining rig unless there's a free electricity for them to keep going on with the miner. That's why the hash rate is go down. The reason, one more reason, if the hash rate go down, the transaction fee will go up, and this is one of the reasons why the price of the Bitcoin go down. Bitcoin hash rate over the 30 days period, we all can see big charts, and from 30 days the hash rate dropped down from 25 to 40%. And one more thing is the block times. The block time, so the block time grows something like the 12 minutes instead of usual 10 minutes, but the capacity for the transaction in each block stays the same. This called the congestion. Less space in the blockchain, same demand for sending transaction, and this turn causes an increase of transaction fee. Yesterday, May 19, the average block time was 14 minutes, which reduced the transaction capacity of Bitcoin. Yeah, and one more reason is the fee. Bitcoin transaction fee is increasing. We all can see in the charts here. The chart is a transaction fee per USD. Yeah, the fee is higher. The block time so is longer. Even though fees are high relative to the week before the halving, we are nowhere near their peak in 2017 and sit at about the range of the middle 2019 rally or early days of the 2017 bubble. Based on Xeonbit, the vice president on top for mining pool, he told that fee increase or decrease primarily because of the free market rate in entering the limit space in the block. If there is a continuous amount of a transaction in the Bitcoin network, then the fee will remain high. The block space is limited. This creates the free market. Miner naturally choose the transaction with the highest fee, as it will increase the amount of Bitcoin they make. And miner revenues. The miner revenue declines 61% With now account must at 70 yeah, the revenue of the miner decrease, the miner lose faith and they don't want to mine anymore. 6 is a lucky number. What does it mean? After boom, one of the famous mining boom, it said that it was likely just a fluke. A single boom contains 20% of the hash rate is nowhere near the danger level of the centralization. After boom has about 20% of the hash rate, so there's a non-insignificant probability that they would mine 6 blocks in a row. Any other boom would in theory also mine 6 blocks in a row, but it would be somewhat less likely. Now, reality are temporary things. The only way to go back what would feel like normal for the miner if we were to lose a substantial amount of hash rate so difficulty can adjust even the future. Yeah, it's very tough for the miner after the halving. And then all the miner with the fee and the block time. That's the reason the network is manipulated. And that is one of the reasons why the Bitcoin price dropping down this day. Now we go on to the next